Hello, welcome to European Open Briefing for Wednesday, July the 25th. I'm Rafi Bayajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So it's relatively quiet this morning in FX markets. Most major pairs are steady. Overall risk sentiment is slightly positive. Risk sentiment was boosted yesterday on that announcement by China of fiscal stimulus aimed at boosting growth in China, which did help risk appetite pick up. Equities, though, are mixed both in Asia and in Europe at the start of European trading this morning, despite the fact that we did get a positive close overnight on Wall Street, helped by strong US earnings. The yen continues to pull back. We did see, of course, those sharp gains early in the week on those reports that the Bank of Japan could be getting ready to scale back its asset purchase program. We're seeing bond yields also retreat a little bit. Mainly US and Japanese government bond yields are off their peaks from earlier in the week. The dollar and the euro are both steady ahead of that all-important meeting between US President Donald Trump and European Commission President Jean-Claude Juncker, where they will be holding important talks on trade. The pound got a major lift yesterday on news that the UK Prime Minister is taking over the Brexit negotiations, taking that over from the Brexit department, and that signaled that boosted the chances of a softer Brexit. The Australian dollar did spike higher earlier today on inflation data, but then fell back quickly. We can see the Aussie currently trading around 0.74. The Kiwi is also marginally lower against the US dollar. There wasn't much reaction to trade data out of New Zealand, which showed the monthly trade balance in New Zealand turning negative from a surplus. In commodities, oil prices are higher following the US inventories report from the American Petroleum Institute yesterday, which showed a drawdown in US crude stocks. Oil is marginally higher, trading around $1,225 an ounce. Help a little bit by a somewhat softer US dollar. And if we look at the major performers this morning, we can see oil is the biggest gainer, followed by gold. Euro yen, dollar yen are both up this morning. They were both at the bottom of the table yesterday on the stronger yen. Pound dollar is also not doing too badly, but at the bottom we've got Aussie dollar, which fell soon after that inflation data. Let's now have a closer look at the dollar yen pair. We can see the pair has steadied after recovering a little bit from that 2-week low on Monday. It's been hovering around the 111.20 yen level. So the focus, though, for today will be those trade talks between Jean-Claude Juncker and Donald Trump. So the US wants the EU to lower tariffs on US products and is threatening steep tariffs on European car imports if the EU doesn't reduce its barriers to US imports. The EU has said that they're not going to the US with a particular offer, and Trump doesn't seem too optimistic either. He tweeted earlier today that hope they do it in terms of lowering their tariffs, but they won't. So it remains to be seen what's going to be the outcome of that meeting. If we do see further escalation, we could see dollar yen coming under further pressure, and the euro yen, the euro dollar pair as well, which slipped back below the $1.17 level yesterday after briefly rising above it. Let's now have a look at the UK pound. We can see cable rising back above both the 20 and 50 moving averages in the 4-hour chart. It earlier reached a high 1.3174. That's a 1-week high, recovering substantially from those lows, 10-month lows that we saw last week. So the pound got a boost after Theresa May yesterday announced that she will be leading the Brexit negotiations herself, while the Department for Exiting the European Union will be focusing on preparing the country for Brexit, and as well as the likelihood, possibility of a no-deal Brexit. And although the market pricing is that Bank of England will be raising interest rates next week. The uncertainty surrounding the Brexit negotiations has capped sterling's gains. There's been a lack of progress in recent months, and with time running out, there are growing concerns that the UK could crash out of the EU, and that's why we're seeing limited upside to any positive news for cable. And finally, taking a quick look at the Australian dollar, we can see here that's been mostly range bound over the past months. Earlier today, we had Australian inflation numbers for the second quarter, where CPI rose to 2.1%, falling slightly short of expectations of 2.2%. More significantly, the RBA's core rate was stuck at 1.9%. That's below the RBA's target band of 2 to 3%. So this means that the RBA isn't likely to be raising interest rates anytime soon. We saw the Aussie briefly rising to a 2-week high of 0.7448 against the US dollar before falling to just below, just around the 0.74 handle. Overall, though, the Aussie has been supported in recent days from a somewhat weaker US dollar, as well as improving risk appetite following that fiscal stimulus from China, that announcement that we got yesterday. And taking a quick look at today's economic calendar, we've got German IFO numbers coming up shortly, but it's going to be fairly quiet for the rest of the day. That's it from me. Thank you very much for watching, and have a great day.